there are three facts that we definitely know for sure. One, it's a big market in terms of the dollars being put to work in it. Two is that it's now starting to attract the focus of institutional players, which is both good and bad from an accounting point of view. And then the third is that it's evolving very quickly.
You're listening to The Successful Bookkeeper with your host, Michael Palmer. Listen each week as inspiring guests share their secrets of success to help you increase your confidence, work smarter, and build a business you love. This episode of The Successful Bookkeeper is brought to you by PureBookkeeping.com, the proven system to grow your bookkeeping business.
Welcome back to the Successful Bookkeeper Podcast. I am your host, Michael Palmer, and today's show is going to be a very interesting one. Our guest is an expert in cryptocurrencies and is an assistant professor in the Business and Economics Department at Lehman College. During his career, he has worked in several corporate financial planning and accounting roles, both for the for-profit and nonprofit sectors. He is also on the advisory board of the Wall Street Blockchain Alliance. Dr. Sean Stein Smith, welcome to the podcast.
Thank you, Mike. Happy to be here.
Hey, it's our pleasure to have you here, and such an interesting and exciting topic in the world today. I can't wait to get into this and help our listeners understand this a bit more, because this is definitely going to be a part of their future, I am sure.
Absolutely right. I mean, and I'd really say that, honestly, while the whole blockchain ecosystem and conversation is obviously a very high profile topic at the corporate level and at the AICPA level and at CPA Canada, that honestly, really the touch point for bookkeepers, accountants, anybody working in the accounting or finance space is going to be through the field of cryptocurrency.
Yeah. That's exciting. Now, before we get into all of the content,
sure,
tell us a little bit about yourself leading up to this point. How'd you get here talking about cryptocurrencies?
Sure. So probably my sort of background starts, I worked in industry, as you mentioned, in a number of roles in the for-profit and in the nonprofit spaces. But in all of those roles, sort of the actual work that I did, it was almost half accounting and half IT, right? So I was always on teams that were either doing ERP reinstallations, ERP upgrades, or working with the IT folks to basically make sure that our dashboards and that our reports were all mapped accurately, updated, correctly, and all of that fun sort of back end stuff. And so really sort of my interest in this whole emerging tech area, right? Be it blockchain, be it AI, be it automation tools in general, or more honing in on it, cryptocurrency, all of that sort of builds out of my prior background and my interest. So after I transitioned out of the corporate sector into higher education and into academia, I actually had the time, right, to actually dive deeper into these areas. And really, as I was doing that, I got a great understanding and a great look at really how powerful these tools are going to be going forward.
Wow. And it seems that the power of this and the attention that it's getting, I mean, it's had a lot of attention from both positive and negative, I would say. Mm-hmm. Where do you think the world is today when it comes to cryptocurrencies and their understanding of it?
Yeah, excellent question there. And so actually, I do have a piece of trivia that actually we are actually just passing the 10th birthday of Bitcoin.
That's amazing. 10 years.
Yes. Yeah. And so the official Bitcoin white paper was actually first posted online on Halloween back in 2008. And so as that birthday sort of fades into the past, I would say that we're at a good spot right now, and that optimism, though, does have to be tempered with a little bit of caution. Because obviously all of our conversations and our analysis in this whole cryptocurrency space is really intense, right? And everyone's talking about it. There are billions being put into it. But at that exact same time, there is still some uncertainty as to how ultimately these cryptocurrencies and crypto assets are going to be treated from a guidance and from a oversight point of view. So I do think that right now we're probably still in the first inning of this cryptocurrency game, or the first period, or the first quarter, right? And on top of that, in terms of cryptocurrency actually being used as a currency, that is still very much a work in progress. And that really derives from the fact that from an accounting point of view and from a tax point of view, there's a lot of still, again, uncertainty as to how to account for these items, how to classify them, and also, frankly, what advice to actually give to your customers and your clients if they are coming to you with these questions.
Absolutely. I mean, I would imagine that I've seen a few headlines where people are now accepting something like Bitcoin. Well, it's, to me, that's like, oh, cool, that's neat. I mean, I don't have any of those. It's like I can't go and buy anything with a Bitcoin. But if I'm somebody that needs to account for that in a business, it's a whole nother conversation, right?
Yeah, absolutely. I mean, and I'm going to agree with you there that basically that there are some companies who are taking payment in Bitcoin, but that really for the vast majority of people, it's not easy to obtain the Bitcoin, hold on to the Bitcoin, and actually use it to pay for goods and services, right? So as far as that stage in the Bitcoin sort of development goes, that's still very much, I think, down the road, right? But from an accounting point of view, this is a real issue and a real conversation. And it's a real conversation, and by conversation, I mean both a challenge and a opportunity, due to the fact that the only guidance in the U.S., at least, is a IRS memo from 2014, which is a bit dated now. And so really, to build on your point and your comment, if you have to do the accounting for this, how do you do it, right? From a conceptual point of view, right? Like what are these things? Are they inventory? Are they foreign currency? Are they intangible assets? What are they? And then after that, how do you actually get it to work with your other ERP systems, right? And it could be QuickBooks, it could be Xero, or any of the other platforms out there.
So how are people dealing with it today? And I guess that maybe the bigger question is, there's a lot of uncertainties. What are some of the certainties that we have today about where this is going?
Mm-hmm. So what I would say there is that as far as what people are doing today, it's a blend of approaches, right? There are some people who are recording these types of information in their accounting software programs as either foreign currency or as different types of inventory, and then basically doing some work outside of the accounting software to actually do the math and to actually track the basis of these different cryptocurrencies. But that's a little challenging, right? Because as of right now, different platforms like Coinbase and like Binance are not under the same obligation as a brokerage like a Fidelity is to actually give customers and clients a 1099 at the end of the year. So then all of that means basically that there's extra manual labor right now on the side of bookkeepers, of accountants, of CPAs who are trying to make sure that they're accurate and on top of all of the purchases, sales, and the uses of Bitcoin and other types of cryptocurrencies. But I would say from the point of view that I've seen and I've heard, folks are either doing it entirely offline in a Excel workbook, or they're putting a round peg into a square hole by calling it something like inventory or foreign currency in their current software. Now, as far as what we do know for sure, there are a few facts that we definitely know. One is that the cryptocurrency market is worth a lot of money. As of October 31st, the overall value of the market is 200 billion US dollars. That's not chump change. and that over half of that market, even now, even after its price has dropped quite a bit in 2018, the overall market for Bitcoin is worth $110 billion. So it's a big business and it's moving very fast. That's the other fact that we know for sure. There's institutional interest now in the space. So just a few weeks ago, Fidelity launched the first institutional platform for institutional investors to put money into different cryptocurrencies. And I'm only bringing that up because as those bigger pools of money and more, frankly, influential players in the financial services space get into this market, that is going to push the conversation on frameworks and guidance off the back burner and up onto the front burner. Because frankly, they have a fiduciary duty to know what they're doing, how to account for it, and to be good stewards of their client capital. And then the third piece of information that we know for sure is that the market is evolving on an almost daily basis, right? Because just in the last couple of years, we've moved from initial coin offerings to airdrops. And there are new iterations of cryptocurrencies being launched into the market, such as stablecoin offerings and now a secured token offering versus a ICO. So I'd say to sum up, there are three facts that we definitely know for sure. One, it's a big market in terms of the dollars being put to work in it. Two is that it's now starting to attract the focus of institutional players, which is both good and bad from an accounting point of view. And then the third is that it's evolving very quickly.
Wow. All three certainties bring more uncertainty.
Yeah, definitely.
That's crazy. So really interesting. Okay, so we've got the cryptocurrencies and now they're launching other currencies into all of this. Help us understand how blockchain and cryptocurrencies go together.
Excellent question. And, because cryptocurrencies, Bitcoin, and blockchain are all normally tossed about in the same conversation and sometimes in the same breath. So the best way to sort of imagine it, right? And different analogies work for different people, but the best way that I imagine how it works is that I like to think of blockchain almost like the internet, right? And that the internet has applications that are running on it, like Facebook, Google, and Amazon, right? And on the blockchain, which also don't forget, has to run on the internet. So it's the internet, and now on top of that, we have blockchain. Then on top of that, we have different applications like Bitcoin, like Litecoin, like Ether. So all of those applications and cryptocurrencies run on a blockchain. Or to put it differently, blockchain is what actually puts the crypto into cryptocurrency. Without the blockchain, you wouldn't have any cryptocurrencies out there.
And why is that? So is it because the crypto part is that it's oh, I'll let you, I have no idea, so I'll let you explain it. I'm trying to get sense of that myself.
Sure. So the best way to connect those dots, right, is that unlike most technology systems, which are built out with some functionality first, and then security is added at the end in the form of a password or a firewall. When the idea of a blockchain was first rolled out, the entire purpose of behind it, and all of this is outlined in that white paper that was uploaded in 2008, the entire purpose of this whole blockchain idea, it was to create a alternative way for individuals and institutions to actually do business without any third party in the middle. Now, while that's a very short statement, that has powerful implications, right? Because banks, lawyers, accountants, bookkeepers, there are a whole host of third parties whose primary job is to verify the identities of the customers at either end of this transaction, and to verify that the funds being sent from party A to party B actually get there, right? And the whole idea behind blockchain and the Bitcoin blockchain, it was to do away with that and to set up a peer-to-peer network, meaning that the two of us, for example, we could send money back and forth and do business back and forth without having to know each other at all. So it basically took the functions that are performed by a third party, like a bank, a PayPal, or a credit card company. And instead of having that centralized in one company or in one database, now it pushes that out to the whole network. And I don't want to dive too much into the computer science part of it, but basically, in order for any piece of information, in order for any transaction to be verified and uploaded onto the blockchain, there has to be some sort of consensus-based approval. Or in other words, if I'm trying to upload data, certain other members of the group of the blockchain have to basically check that data is accurate and I'm following the rules of the blockchain.
Amazing. So how does that in your understanding impact, or how are lawyers, doctors, bookkeepers? Well, if I put doctors in there, it's not really probably part of the professional field, but not probably at this point affected by blockchain, but maybe they are. But how is it going to affect them in the future?
I'd say, honestly, within now it's important to also sort of realize that right now, I mean, we're still in very early days, right, of the blockchain ecosystem. And that but going forward, though, the entire process of doing tax returns, of doing audits, of doing financial reporting, that is going to change, right? Because, and it's going to change really for two reasons. One, by the attributes brought by blockchain itself, right? Because if data is approved by the group of parties who are impacted by it, if that data is encrypted after it's been approved, and if that data in the form of a block forms a permanent record that I cannot alter, and that if I actually want to do any changes, I have to upload a additional block, that basically means that the audit trail is already there. And as far as income taxes go, one of the key pain points in taxes for withholdings, unemployment, payroll taxes, all of that stuff, is that people don't have the same information, right? So the firms, the employees, and the tax authorities don't have the same information. And if they do, it's been updated at different times. And there are some instances over in Europe, for example, and in South America, where there are countries actually at that national government level who are trying to institute blockchain programs to help basically collect taxes on an ongoing basis versus doing it once a year or every quarter. And as far as overall, right, in the accounting space, lawyers, healthcare, it's basically any business line that has a few characteristics. One, that it deals with digital information. Two, that a portion or all of that data is sensitive information, be it healthcare records or financial data. And then three, that as a part of how that business industry works, that there is a reliance on a third party to help verify and secure that information. If there's an industry that has those factors, it is going to be impacted by blockchain. Now, even if it's not being impacted now, I'd say within 5-10 years, it is going to be.
Yeah, I mean, I think that speaks for every industry. How it will be impacted is a big question mark, and like anything, our roles will change in the industry. So there's going to be something to do. We just don't know exactly what that is yet.
Mm-hmm. And really, I'd say that I know that I give a lot of presentations and I do a lot of engagement with accounting folks, and that a big fear and a big misconception, I believe, is that auditors are going to be put out of work and that bookkeepers are going to be put out of work, right? Right, because if all of this data is verified and uploaded and encrypted on a continuous basis, what is actually left for us to do? Now, there are two big areas that are going to grow out of this. One is that as more and more information is stored in a digital format or in a cloud-based format, there are going to have to be good internal controls over every aspect of that process from beginning to end, especially if certain pieces of that process are being automated too. So there are going to have to be good controls, good control testing, and just good analysis of what the system is actually telling you. And then that's where bookkeepers and accountants can really add some value. Instead of just having to compile and then report the data, now going forward, we are going to have some more time to actually help our clients with their business, which is what they want anyway, right? Because I don't really think that a tax return or that a audit or that a compilation really, in the eyes of most clients, adds a huge amount of value to the business. And so then going forward, point number two, as more and more of that base level work is either augmented or automated or otherwise changed, we are going to have more time to actually help our clients understand how their business is doing and then help them find ways to improve that performance going forward.
It's really interesting. I think for the listener, that gives them some insight into, what their role might be. But I definitely experience as a small business owner myself today. There's still, we're leveraging all sorts of technology today, and whilst we remove some things that we needed to do yesterday, it brings new things. The technology provides all sorts of opportunity, but it also provides opportunity for it to break, for it to be optimized, for new technology to be adopted. It's just constantly changing. And so there's almost this role of a technician that helps people understand it and make sure that it's being done correctly and make sure that they know how it's been built so it can be fixed when it breaks. And that is going to change tomorrow. So it's just interesting. But I think for the listener, they get some sense from this conversation of, hey, number one, you need to be paying attention to this to understand how it works. And number three, start to think about, well, where is it changing? What are the opportunities that can be taken on from it?
Absolutely right. I mean, there are going to be changes, right? I mean, that is full stop, fact. But I mean, things are going to change anyway, right? When we first had the internet rollout, that was a big change. When the first computer was introduced, that was a big change. When credit cards were first introduced, that was a big change, right? So all that we're doing now is just basically going forward into a new type of business environment, right? So the fundamentals of business and being able to understand how a company is doing from the financial point of view aren't ever going to change or go away, right? People are always going to have to know how they're doing and then how to improve. And then echoing on your point, even with a new tool put into practice, I think we all know that every time you onboard a new technology or you try out something new, it is never going to work perfectly right the first time. There's always going to be iterations and troubleshooting and then ultimately upgrades and then changes, no matter how good that technology tool is at the beginning. And so really going forward, I'd say to summarize that really our role is going to have to change more from a compliance-based point of view, just focusing on the numbers of the firm, to, as you said, more of a technician, right? Being able to, one, understand how these tools work ourselves, and then two, having the ability to articulate this to our clients now and going forward, and to also help them address issues and problems that are invariably going to come up.
Wow. So interesting, and so many opportunities that you've already pointed to in this conversation around how people can take the next steps in understanding it and being able to incorporate it into their futures. It's so interesting. Just the other day, someone posted in our Successful Bookkeeper Facebook group an article about the top 25 careers that are dead. Or something along those lines, and bookkeeping was one of them. And there's a whole bunch, probably a big chunk of the list that you'd mentioned. But I think what it does, there's truth to it for sure. Things, when you say something's dead, it's like, well, yes, parts of it are dead, but there's something else that goes in its place. But I think the disservice that it does to any industry that's one of those 25 is that the article's been written to get clicks, to get headlines, to sell. No, we're not selling papers anymore, but as an author. So it's not to say that there's no truth to it, but it's also to create fear in the marketplace and to have people paralyzed by, well, what will I do? And to think that their career is over, so they must, going to shove off, would be a disservice to the many small business owners and medium-sized business owners out there that need the bookkeepers that are listening to this right now. And so for you to come and share with, well, how, the more I listen, the more I pay attention to it, the more I see there is going to be even more opportunity for the bookkeeping industry, because there is a lot of change going to happen. Someone's going to need to be the steward of that change for small business and medium-sized business.
Absolutely right. And I was just having this exact same conversation earlier this week and then earlier in the past month, is that really, instead of, being anxious, because there's always anxiety, right? Whenever there's big change in an industry, especially if that industry is the one that you happen to work in, right? But there are always going to be changes. But this whole area, right? Emerging technologies, be it cryptocurrency, be it blockchain, be it automation, the way that I see it is it's almost a once in a lifetime opportunity for us as a field and as an industry, as bookkeepers, accountants, and CPAs, to rebrand ourselves, right? So all of us, and I'm sure all of us have heard it, that the ultimate goal of anybody in accounting is to be a trusted advisor or to be a business partner. And up until very, very currently, it's been awfully tough for us to actually get to that point because of all of the manual work and the research and the confirmations and the verifications that all of us had to actually do in order to get that base level work done. But as these new tools come out, and we don't have to be experts in everything, nobody is. But as these tools come out to the marketplace and we're actually able to augment and to automate some of that lower level work that, on top of not adding too much value, most practitioners don't actually like to do anyway, we're going to be able to actually become those business advisors and, as you said, to become stewards of that change and to help drive that change going forward. Because we're in a good spot anyway. As accountants, as bookkeepers, and as CPAs, we are turned to anyway as experts and as trusted advisors to help our clients manage their businesses and their business issues. And so now all of this change that's happening is arguably, as far as I'm concerned, going to make that expertise and those insights even more valuable going forward.
Thank you so much for that. Exciting times, and really I feel like I understand the landscape a bit better. I know that we didn't go very deep into the technology and all the different things that are occurring. We don't have all the time to be able to do that. Probably need to go do a year-long course with you. But I'd love to have you back as things change and to help our audience keep up to date with where things are going and where things are. But before I let you go, please share, if people want to find out more about you and about the work that you're doing and consume more of your content, what would be the best way for them to do that?
Sure. I'd say probably the easiest ways to find me are on Twitter at Sean Steinsmith, on LinkedIn, again, at Sean Steinsmith, and also on my YouTube channel that I co-host with my partner. It's called the Entrepreneurial CPA Show, and it's freely available on YouTube. So, yeah. Yep.
Well, that's fantastic. Sounds like an incredible amount of resources. And we will have, of course, those links in our show notes for our listener to go and start keeping up to date with what's happening in cryptocurrencies and blockchain and technology overall. Thank you so much for being on the show today.
Awesome, Michael. Thank you for having me.
Our pleasure. And with that, we wrap another episode of the Successful Bookkeeper podcast. And oh my goodness, what an interesting and exciting episode that it has been. To learn more about today's guest and to get access to all sorts of valuable free business building resources, you can go to thesuccessfulbookkeeper.com. Until next time, goodbye.
You've been listening to The Successful Bookkeeper with Michael Palmer. For more information and to download the resources mentioned in this episode, please visit us at thesuccessfulbookkeeper.com. Thank you for listening.